Bismillahirrahmanirrahim. Assalamu alaikum, students. This is Salareb, your accounting teacher. Today we are going to discuss about the bookkeeping and rules of debit and credit. Before we move on, in the previous lecture, I had informed you that whenever a business performs an activity, that is called transaction. These transactions are recorded with the help of evidences which are called source documents. These source documents are needed to record the transaction in books of prime entry. Remember, the recording of business transaction is called bookkeeping. In accounting, when we record the transactions, the business transactions in our books, these this process is basically known as bookkeeping, and it is done by bookkeeper. The transactions or the bookkeeping is basically done with the help of a system which is known as double entry bookkeeping system. According to this system, every transaction has two effects. One is called debit and the second is called credit side. It further says that every debit entry has an equal and opposite credit entry. Here, some students have misconception about debit and credit. They believe debit means addition and credit means subtraction, which is wrong here. Up to some extent, maybe for few transactions, it may be right, but the exact definition of rules in debit and credit is that these are basically the tools to record the transaction. Debit means left hand side and credit means right hand side. In accounting, the transactions are recorded on debit side and on credit side. For example, I give you some examples first. For example, a business has purchased goods for cash. When the business purchases goods for cash, the purchases increase and the cash decreases. So purchases would be debited and cash would be credited. Here, the purchases are written on left hand side, whereas the cash is written on the right hand side. So this is called debit side and this is called credit side. Now again, please don't get confused or don't have a misconception of that whenever something increases, it is on debit side, or when something decreases, it is recorded on credit side. No, there are some set of rules which I'm going to share with you just within a few minutes. One more example of debit and credit. For example, if you have sold goods for cash and you received a check, so bank would be debited and sales would be credited. This is the left hand side, this is the right hand side. In the same manner, if we deposit our cash into the bank, so bank will be debited and cash would be credited. So this is how bookkeeping is done with the help of transactions on debit and credit. Remember, according to this transaction, the amount of debit and credit should be equal. The amount of debit and credit should be equal. Every transaction has two effects. If I am depositing cash into the bank of $100, so my bank is increasing with $100, whereas my cash is decreasing with $100. So remember, every transaction has two effects. One is debit and the other is equal but on opposite, which is on right hand side. Now moving on to the rules of debit and credit. What are the rules of debit and credit? There are some set of rules to record the transactions. First of all, your transactions are basically based on these five categories of accounting or classification of accounting: assets, liabilities, capital, revenue, and expenses. First, we discuss about assets. Assets are basically the resources owned by the business. All the resources owned by the business are called assets. There are two types of assets, like current assets and non-current assets. You need to think according to the accountant's point of view. You are an accountant, and in the business, what is increasing and what is decreasing, what increases or what decreases here. Now, when the asset increases in the business, it is always recorded on the debit side, which is your left hand side. Whereas when the assets decrease in the business, they are recorded on the credit side. For example, assets, I give you some examples of assets here. I'm writing here debit and I'm writing credit, right? Now, assets such as cash, when cash increases in the business, when you receive cash, your cash account is increasing in the business. When it increases, it is recorded on debit side. When you receive a check, your bank increases, it is recorded on debit side. The third is trade receivable. Trade receivable is an asset. But trade receivables are basically your credit customers to whom you have sold goods on credit. And now you have to receive amount from them. So they are your receivable. Now, when receivable increases, it is recorded on debit side. In the same manner, when the business purchases premises, premises is a non-current asset. When premises increase in the business, it is recorded on debit side. When machines increases in the business, or when machines increase in the business, they are recorded on debit side. When motor vehicle increases in the business, it is recorded on debit side. However, when you pay cash to someone, your cash decreases. And when your cash decreases, it is recorded on credit side. In the same manner, when you pay by check to someone, your bank decreases. And when your bank decreases, it is recorded on credit side. In the same manner, our trade receivable. When we receive the amount from our customers, it decreases our customer's account. Or in other words, it decreases our trade receivables. And when trade receivables decrease, they are recorded on credit side. Let's talk about machines. If you are selling the surplus machinery, or if you are disposing the surplus machinery, the machinery is reducing from your business. Therefore, it is recorded on the credit side. So remember, when assets increase in the business, they are recorded on debit side. When they are decreasing, they are recorded on credit side. I hope it is clear to you. The next is the liabilities. Liabilities are basically the obligations of the business. The liabilities occur when the business purchases goods or products on credit from its suppliers, or when the business takes loan from someone or from bank. This is basically the liability the business has to pay. Now, when the business increases its liability, first of all, liabilities are of two types, current liabilities and non-current liabilities. When liabilities increase in the business, they are recorded on right hand side, which is credit side. On the other hand, when liabilities are paid, they are decreasing in the business. When they are paid off, when the business pay back to the suppliers or to the bank, then the liability decreases in the business. And when it decreases, it is recorded on debit side. Let's have an example of liability as well here. I'm writing here credit and debit. Now, the liabilities are, for example, trade payables. Guys, trade payables are your suppliers to whom the business has purchased goods on credit. They have not paid. We have not paid to them. So we have to pay them in future. Therefore, these suppliers are our liabilities. When this liability increases in the business, it is recorded on the credit side. The next is bank overdraft. Bank overdraft is a liability. Now remember, bank can be an asset and it can be a liability, but there is a difference. If in your bank account the amount is in positive, the amount is there in your bank account, that is your asset. For example, if in your bank account you have $2,000, so this is basically your bank on positive side and it is your asset. But sometimes the business takes a short-term loan. Short-term loan means you have to pay within 1 year. So a business takes short-term loan from the bank. And why is it so? For example, if you have $2,000 in your bank, but you have to pay immediately $2,500. So what will you do? You request the bank to give you $500 loan. The bank will give you the loan, and now in your bank account, the bank balance will drop to minus 500. When it drops to minus 500, it is called bank overdraft. So when the bank amount is in positive form, it's your asset. But when the amount goes below zero, in negative, in minus, it is your bank overdraft. Now, when the business takes this loan, the loan increases and it is recorded on credit side. The third is bank loan. Now, this loan is a long-term loan and the business takes this loan for 5 years or 10 years, more than 1 year, the business has to pay to them. For example, if the business has taken this type of loan, the loan has increased and it is recorded on credit side. When we pay to our suppliers, the trade payable decreases. When the trade payable decreases, it is recorded on debit side. In the same manner, when we pay the bank overdraft to the bank, so the bank overdraft will decrease and will be recorded on debit side. In the same manner, if we repay the bank loan to the bank, the liability decreases and it is recorded on the debit side. I hope it is clear to you till here. The next is capital. Capital is the owner's share in the business. Remember, guys, capital is basically the initial and subsequent investment of the business, of the owner in the business. I repeat, capital is the initial and the subsequent investment made by the owner in the business. If the owner has invested the amount to start the business, this is called initial investment. Now, remember, according to the business entity concept, this is basically one of the accounting principle which every accountant or business has to follow. According to business entity concept, the business and the owners are two different entities. I would write it for owner only. The business and the owner are two different entities. It means to say the personal expenses and income of the owner cannot be recorded as an expense of business. If the owner has to pay the fee for his children against the education, or if the owner has to pay the rent of his house, or the owner has to pay for the grocery of his house, he cannot record as an expense in the business. For this, he has to take amount from the business for personal use. In the same manner, when the owner invests into the business, he has to invest from his personal account. When the owner invests from his personal account, it increases the owner's share in the business. And when the owner's shares increases, it increases the capital. And when the capital increases, it is recorded on credit side. However, the capital also decreases and is recorded on debit side. How the capital decreases? Beta, like I said, when the owner invested in the business, or when the owner invests in the business, whether it's initial or subsequent investment, this increases the owner's capital and it is recorded on credit side. But when the owner takes some cash or goods from the business for his personal use, it decreases his share. He has to take the amount from his capital, and that decreases his capital and is recorded on debit side. The amount which is taken by the owner for his own use is called drawing. Drawings means that the owner has taken an amount for his personal use, for his home, or for his household work. That is called drawings. Drawings are of two types: drawings of cash and drawings of goods. When the owner takes cash, it is called drawings of cash. When the owner takes the product for his personal use from the business, this is known as drawings of goods. And these two drawings reduce owner's capital. Then we have revenue. Revenue is an income. Revenue is an income which is generated by the business. Remember, sales is the part of revenue. The most important part of this revenue is sales. That means to say that through sales, a business increases its income. When the business sells product, it increases and its income in the business. The other incomes are also there. For example, rent receivables, insurance, interest receivables, rent receivables, etc., etc. So all these income, all these amounts are generated by the business. They are called revenue. Now, when the business generates income, it increases in the business and is recorded on credit side. However, when the income decreases, it is recorded on debit side. The question arises here, sir, how is it possible? How the income decreases in the business? So I'm just giving you an option, the examples here of revenue or income. Now, like I said, the main source of income of a business is sales. Sales of product or sales of goods. Whereas other incomes are rent. If the business has rented a place and the business is taking out the rent, it's receiving the rent, it's his income. In the same manner, if the business is taking interest, it's an income. If the business is taking commission, it's an income. So all these are basically the income, but the main source of income is sale of goods or sale of product. When they increase, they are recorded on credit side. However, when the income decreases, it is recorded on debit side. And how is it possible? Beta, when you sell the product, the sales increase the income and it is recorded on credit side. But when the customer returns the faulty goods back to you because they are faulty and they cannot be accepted by the customer, that is basically sales return. In new terminology, we call it as return inwards. Now, when sale increases, it is recorded on credit side. But when the sales is written, it decreases the income. Now you will not get the amount of that sale. So that would be recorded on debit side. For example, if I have sold goods of 100 units, or if I have sold goods of 100 shirts, these 100 shirts had increased my sales. Out of these 100 shirts, 20 shirts were basically faulty and they are returned to me. When they are returned to me, so my sales has decreased from 100 to $20. This is why I said that when sales decreases, it is recorded on debit side. The last but not least are expense. Expenses are basically the facilities which have been incurred by the business. Remember, when the business spent the amount, when the business spent the amount against the facilities he has taken in order to generate its income, all those facilities and all those amounts spent are called expenses. For example, if the business has taken rent, a place on rent, so the business is going to take the benefit of that place, and it is going to run the business there in that place and earn revenue. So rent is basically the facility which is which from which the business is taking the benefit of, and it is called expense. In the same manner, interest. For example, if the business has taken a loan, the interest the business has to pay is an expense. In the same manner, heat and light, where the business is being run, the heat and light charges have to be paid by the business, which is an expense. So there we have got a lot more expense, but the most important part is purchases. Purchases is also an expense. It's purchases of goods. We call it as purchases of goods. So purchases of goods basically is an expense. It increases the cost of product which the business has taken up to resale. So when all these expenses increase in the business, they are recorded on debit side. However, one expense can decrease. For example, when we purchase when we purchase goods on credit, it increases our expense. But when we find some products faulty, we can return those products back to the supplier. That is known as purchase return. And when purchase is returned, it reduces our expenses. And when it reduces our expenses, it is recorded on credit side. And this is what is written here. When expense increase, it is recorded on debit side. When it decreases, it is recorded on credit side. Hope it is clear to you. If you have understood this concept, please subscribe my channel, share it to others, and please click on the bell icon so that you could receive my further videos as well. Thank you. Take care. Allah Hafiz.